Why private equity now? That's an interesting question. It's like thinking, should I get out with my umbrella or without? You could get out without, but then if the weather changes, you might be a little bit surprised. Private equity, when you add it to your portfolio, provides you with different benefits. For example, you might be able to benefit from a specific source of value creation. When you invest on the stock exchange, you invest in large, fairly large, mature companies which have reached a certain level of success. So you capitalize on their future being fairly known. They're going to do a little bit more of the same, sometimes adjust, but that's it. In private markets, you can benefit when a company is born and goes through the young age, that's called venture capital. You can also benefit when it reaches adulthood, that's another type of investment. And then you can also, believe it or not, benefit when the company doesn't go well. That's called turnaround capital and distressed debt. So that's one benefit. The second benefit is that private markets, for example, and private equity specifically, allows you to invest in geographical areas that normally would be more difficult to access. There is not every country which is having a stock exchange, for example. So if you want to invest in that country, private equity might help you. And then the third is that you might be able to explore industries which are barely represented on the stock exchange. For example, some very specific niche sectors or sectors which are less well known by the public, like for example, extremely complex biotechnologies or sectors which are not very well known or understood. So this is the second aspect. And the third aspect, which is very interesting, is that private equity is actually performing through the active engagement of the fund manager. So the fund manager would sit on the board and say, maybe we should think about this, maybe we should think about that. And the idea is that this fund manager interacts with the management to create a kind of alchemy, which is going to transform the asset. So today, in the current environment, when you think about it, with a lot of uncertainties, the fact that the central bank in the US, for example, might decrease the interest rates or keep it straight or even increase it. This is the kind of strategy where you want to have an expert working with you and be able to do something you wouldn't be able to do by yourself. And as I said, complement your exposure to the listed stocks by maybe taking opportunities from the movement from the central bank or not, and also be able to deploy a kind of value creation which is fairly unique and very special. So overall, the idea of private market is not just to do it alone, of course not. You will have a portfolio, but the idea is that this is going to complement very nicely, and as I said, that might be the umbrella that you need before going out.